So what is a pair trade? So I think very simply put, it is an idea where a fund manager can take a view that suggests share A is going to outperform share B, and I'd like to express that view in my funds. How do we do that? So I mean, very simply put, you buy shares in company A and you short sell the equivalent shares in company B. So to give you a practical example, if I as an individual decided that I agreed with Warren Buffett and Coca-Cola was a fantastic soft drink, and I felt that Pepsi just wasn't quite as good, I could express that view in the markets by buying shares in Coke and short selling shares in Pepsi, and then hopefully profiting from the difference in the price performance going forward, assuming that very basic investment thesis is correct. Now, I'm not suggesting that that's what one should be doing. It's obviously a very, very simple example. But here's a better example, a real life example of how we use pair trades in practice. So pair trades for us at Peregrine Capital are a very important part of the toolkit because they have a number of significant advantages to us and to our funds. And the first is that when you are taking a pair position, you're normally taking that position inside the same sector. So let's say it's two retail companies in South Africa. We think that one retailer is going to execute and outperform better than another retailer. And I've got the slide up here for you just as an example. This was, in fact, an actual pair trade we implemented in our funds. And the appeal of that is that you're not taking market risk because essentially you have one retailer played up against another retailer. So if there's an exogenous factor that comes into the market that has an effect on retail performance generally, let's say there's an interest rate hike or economic growth isn't as good as one expects, both those companies are going to feel the effects of that, and so those share prices will move in tandem related to that. The way that you make money in a pair trade is by betting on the winner outperforming and executing better than the loser. And in a market like South Africa, that's a really useful tool for a hedge fund manager because you do have a number of very mature industries where you've got a couple of key players in that space, so things like retailers, banks, insurance companies, and being able to extract that alpha by not having to take a view on the overall sector's performance is a very valuable tool in the hedge fund manager's toolkit.